Hey, welcome back. This is Maic and Renee Friedrich with the Friedrich Team here at eXp Realty. And today's question,
Are you feeling stuck in a home that you bought the last 3 years and it's not quite the right house for you anymore?
yeah, that's a great question. And actually, there's some surveys out there, right, that
It's
suggest,
like more than 75% of home buyers that purchased homes from 2020 until now, so we're towards the end of 2023, had some regrets about their purchase and felt like they settled
Yeah.
on the home.
well, and that's the bad news, right? And the
Yes.
good news is if you bought 3 years ago, more than likely you build up a little nice nest egg in equity.
That's
right?
very true too.
Right.
We had a meeting with a mortgage loan officer this week, and he had some really good perspectives and things that he's been able to do to help home sellers and buyers really take advantage of that equity, and also take care of some consumer debt that they've built up since the inflation's been so high.
Right, because there's another statistic that suggests that the savings rate went way down and that people built up some significant consumer debt. And when we're talking about significant, we're talking about roughly on average about $100,000, right? Plus
For some
sometimes
people,
for some people.
a lot of the numbers that he was talking about where he was able to really help clients recently get out of the house that they felt didn't serve them and pay off some consumer debt, because I think a lot of people feel like, oh my gosh, I have this 3% interest rate, I'm never going anywhere. And with the Fed continuing to raise interest rates for things like home equity loans and for
Your credit cards, yeah.
your blended interest rate, when you look at your overall debt picture, is actually much, much higher than that 3%. And so he was able to improve people's cash flow and get them in the more appropriate house pretty significantly. And so anyway, there's a lot of good options out there. And if you're feeling like your house isn't working for you anymore and you have some consumer debt, it might be better on a cash flow basis to sell and buy something that actually works for you and your family.
Yeah, use some of that equity that you built up over the last 3 years, right? And pay it off, really,
Right.
the consumer debt. And then a 6-7% interest rate may still make sense because the cash flow is actually, maybe in this particular case that he showed us,
Right.
was less than $100 difference between the mortgage that they pay and all the credit card bills that they pay.
And someone's auto loans
Yeah.
and student loan debt. So there's a lot of different things that we can do to really look at your overall situation and make sure that you're in the right house and that you're making the right payment for all of the things.
Yeah, so don't buy into the narrative that you got the golden shackles and you're stuck in your house because you have a 3% interest rate and your mortgage payment is going to double, because you got to look at the entire full picture, I think. Right?
Yes.
Yeah.
So if you have any questions, or if you want to chat with us or one of our trusted mortgage lenders about your particular situation, we're always here for you. So don't hesitate to reach out, call, text, email.
Yeah, because that's what we're here for. We want to help you make a right financial decision and be
Yes.
be your resource.
Yeah. And also be happy in your space that you're in.
Exactly.
All right, you guys, thanks for tuning in, and we'll see you soon.
Take care.
Bye-bye.